From markets looking for signs of U.S. economic resilience to a poor start of the year for the yuan, these are the stories to watch in business and finance in the coming week. Markets have mostly made their peace with the idea that inflation will rise under U.S. President-elect Donald Trump. Traders are eyeing 2 Federal Reserve rate cuts for the year, and stocks, still within sights of record highs, look set for more of the same. The December non-farm payrolls report due on January 10th is forecasted to show a rise of 150,000, bringing 2024's job creation to over 2.1 million. That would be the lowest annual total outside of pandemic-driven losses since 2019. Markets will be looking for proof of resilience in the world's largest economy. While the S&P 500 surged over 20% in 2024, warning signs were flickering as the year came to an end. Unease over the possibility the Fed could pause rate cuts if inflation stays sticky or is pushed up by Trump tariffs is hurting sentiment. And LSEG Lipper data shows investors liquidated global equity funds at the fastest rate in 15 years in the final weeks of 2024. The coming days will show whether December's risk-off sentiment was fleeting or the start of something deeper. Another surge in U.S. Treasury yields could be the cue for the next round of stock selling. China is entering 2025 on precarious ground as officials seek to counter Trump's tariff threats. Its stock market just logged the weakest start to the new year since 2016. And Beijing is reported to be mulling a weaker yuan again. The release of December trade and inflation figures should provide a sense of how the world's second largest economy closed out 2024. Investors betting on the European Central Bank easing rates in the first half of the year will face their first test. December flash Eurozone inflation data is due on Tuesday. German and French inflation numbers will be released the day before. Any signs that inflation is easing further would give the ECB scope to loosen policy and support a struggling economy.